And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trade routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the Market Forecast. Today is Tuesday, January the 18th. I'm John. Thanks for trusting me with your time. As always, it's going to be a challenge to find context, always thinking about risk management and thinking about patience. The market's on the move this morning. If you're already in the markets, hopefully you've got things going your way. Big change from yesterday. Of course, yesterday was a holiday. It was a non-settlement day. We're still basing trades off of the settlement on Friday. This morning, as far as economic numbers, Empire State Manufacturing Index came out very dismal. They were looking for a 25.7. It came out negative 0.7. Obviously, things slowing in New York as well as pretty much everywhere else. Still looking for the housing market index at 9 o'clock this morning. A little breaking news this morning, just before the forecast began. I got news that Microsoft is going to buy Activision for $68.7 billion. Other than that, as far as the markets, the stock index futures are set to open sharply lower, as the weakest being the Nasdaq, which has been present for quite a few days, even weeks now. Inflation fears, rising bond yields up to a 2-year high. Stoking inflation fears also is crude oil prices reached a 7-year high last night after a drone strike hit the port of Abu Dhabi in the UAE. Earnings are set to open pretty much almost in full force this morning. A big part of our banking sector out this morning. We have Goldman Sachs with mixed information, PNC mixed information, Bank of New York Mellon beating expectations, Signature Bank beating expectations, and still waiting for a couple of the other banks due out this morning. We're kind of in tandem with the housing market index this morning. We have the lumber prices back in the news this morning. Sharp, supply chain issues, obviously a big part of the lumber shortages that were going on, I think, in 2021, of course, and now again in 2022. We're about 25% off that 2021 high. Random length lumber. One of my first jobs on the floor was in random length lumber, along with my brother Rick. As always, please make sure you hit that lucky like button, comment, question, share, feedback, heckling, all of it's welcome here. Make sure you subscribe to our YouTube channel so you can get notified when we do go live. I'm going to put in the link here for foundations today. We're going to be starting to discuss some of the personality traits that may be beneficial or detrimental to futures traders. There's the link for today's session. For all of you that have been coming to the group coaching session, my apologies for being late. This should only be for this month and the first week of February as we round up trading, Top Step Trading Foundation. And as always, I enjoy the time I get to spend with everybody. So please join me today for Foundation. Again, we're going to be talking about some of the beneficial personality traits that may be something you're going to want to maximize in your futures trading. Taking a brief look this morning early at the VIX. Of course, we know the VIX is going to be higher. It's up 13.5% right now at 2176. We've got the dollar index up 95.54. And of course, yield on the 10-year up again 1.82% at last time I looked. As always, got to say good morning to everybody. Juan first in the room. Yes, you win the prize. Zorain, David, 5:30 in the morning there, sipping on coffee. Yep, he got the prize. Good morning, my brother Rick. Love you. Brian, Theo, good morning. Kevin, Frederico, Vince, good morning. Andres, Drew, Shaw, good to see you. Jimmy Decker, wondering where our good friend Fred Decker is. I know he's been busy in the mornings. Equanimous Trading, good to see you. Jim, Mirek, Island Sim Trading, morning to you as well. Robert Kennedy, Brody, Daniel, Jeff, good day. Charles, good morning. What happened last night, right? Well, we had a holiday yesterday, and everybody is back in the market and able to affect pricing. Yields kind of going higher. Everybody's worried about inflation. We kind of seen these things coming. We don't know how deep things are going to go. That's why we're going to be looking at those things today. Terry King, good morning. Devontae Joe. Devontae, good. I'm glad you're enjoying the foundation. It's some, pretty basic information, but it's all meant to help your performance and everybody's performance in trading. Good morning, Jerry is awake. Nicholas, Kevin, will I win a professional account? I reached 30,000. Looks like 3,000K in goal in one day. Will I win a professional account? Well, Oran, you got a consistency metric that you've got to follow. So I would check your dashboard and find out what else you need to do. Sarah, good morning. Juan, should we trade CLH? We're going to be trading March yesterday. The volume was higher yesterday, so we switched to March yesterday. It's fine if you traded Feb yesterday, but definitely trade March today. Ryan, average auction related to markets and profile. What's that? Average auction related to markets and profile. Average auction. I would think that's a range type of thing, Ryan. It's been a while since I read the book. But it's always looking at the markets in what they are, and that is an auction, an average auction related to markets and profile. I'm thinking range, average range of the auction. Expediter, George, Jacori, Three Lions, Rob T, Scott, Wen, Nico, good morning. Robert, good morning. Past step 2 again on Friday. Nice job, Robert. Great to hear. Take your time and build that account. Remember, dance with the one you brung. Keep the process that got you through step 2 into the funded account. I'm looking forward to seeing your success, of course. Charles, Nico, Lamus, Bill Foley, and Johnny Baracco. It's good to see everybody this morning. We're going to jump into the charts here very shortly, just trying to remember if there's anything else that I wanted to mention. As usual, we're going to start with the E-mini S&Ps. We'll take a look at what's going on with the opening in crude oil, then on to the rest of the products and the charts. Remember, yesterday is a non-settlement day, so the settlements that we're going to be talking about are Friday's settlements. We didn't have a full day yesterday. The exchange considers that a non-settlement day, so if you're looking at certain platforms, it may look a little bit funny because the line from yesterday may be the line we're using today. It's not going to be that way on TS Trader. Most platforms do separate those days. Some, however, that follow CME protocol do not. All right, let's take a look now into the charts. All right, so here's the daily in the S&Ps. We've been continuing to try and hold upside structure in the fact that we've been continuing to put in higher lows and continuing to put in higher highs. So it looks a little different in the Nasdaq. We'll, of course, look at that. Inflationary pressures have pushed price to weekly kickoff low and beyond. There is a volume naked point of control down around 45, 93.75. that the market did check in the overnight, has not checked in regular trading hour session. When I look at this, I think, okay, we've been pushing lower. We pushed lower. We've been really running into an area here where we've probed into. We've had auctions that were quickly ended to the downside, and new upside auctions. When we see these long shadows, this is the market getting a little bit too cheap. Sellers not willing to sell it there. Buyers coming in and bringing the price back up. Now we're looking at a potential change here in that weekly kickoff low and that naked volume point of control are really kind of vital levels, I think, for us to try and maintain price above. Of course, we can look down below it. It's all about time and volume as far as acceptance is concerned. I'm really, for upside hoping we don't find acceptance down below those levels. But overall, right now, as the market looks, it looks like we're at the lower end of the range here. The range continues to try and push higher. We don't have any information as far as open interest is concerned. Settlement, we can see, is extended from Friday's settlement through yesterday's very narrow range. If we do have overnight inventory, you've got to be thinking that overnight inventory is pretty short. We've got a gap below below yesterday's holiday range, not necessarily through a gap from the last time we had all of our participants present. Friday, this is what we're kind of talking about. Every time the market gets down into this area or below, there's a swift rejection. Friday was no different. We hung there yesterday with very few participants and volume. Look at the volume yesterday. Just absolutely nobody here, nothing to do, nothing to see. So as we continue to watch the markets turn, we're going to be looking at a potential overnight inventory to the short side. We're looking at gap rules. I mean, this was a regular trading hour session, even though nobody noticed. So we do have a gap to the downside. Weekly kickoff is in play and pivotal. This green line right here is a previous naked point of control. Notice how the market goes to it. It's a visual level. The overnight short time frame weaker hands traders have had the opportunity to look at it. We've not yet had the opportunity in regular trading hours to see that naked point of control just below weekly kickoff low, nor have we seen it in regular trading hours. So this whole area right here, anywhere between weekly kickoff low 46.02 and the 45.93.75 is going to be somewhat pivotal. It's going to be a challenging trading day. I'm looking forward to trying to remain patient. I've already told myself it's okay if I miss something. There's going to be good opportunities presenting themselves as the day goes on. So, John, don't go looking for trades. Look for trades that come to you and say, hey, here's your opportunity. This is cheap. Let's try this. Let's take a look at the crude oil. It's going to open here in about 1 minute. And, there's a lot to be discussed here, certainly. We have a pretty substantial and organized rally. This rally just keeps getting fed. The weekly kickoff high currently in play, that level is 84.80 in the March contract. We're just about to open up, and look where we're opening up, right at it. So there may be an opportunity. I know we talk about the opening range trade. We watch the opening range trade. These weekly kickoff levels are areas that I believe longer, stronger, bigger time frame, bigger money traders are going to adjust inventory. We've got information of a drone strike in the UAE yesterday in Abu Dhabi, and that port as well as Saudi Arabia are kind of viewed as the only ones that can really increase production. And if there's damage there, that may be a problem for exporting to other countries such as the US. So we're getting a lot of upside pressure, continuing to see a lot of upside pressure in crude oil as the supplies seem to be continually challenged. Let's take a look at the 30-minute chart and we'll watch the opening here. So here's yesterday's narrow, small range. Not horrible volume. I think a lot of folks were kind of watching this. Settlement, again, a non-settlement day, just to put it out there, 83.30, settlement from Friday. We've got last week's high right here, this pink line. Look where it is. It's the low of the regular trading hour session from last night. Here we go, 84.80. Taking a look, finding resistance back down below it. What is the open going to do for us? We're going to see that very shortly. So this technical level, knowing that there's new information in the marketplace, may lose some of its importance, but we can't lose the fact that it is a technical level, again, looking for longer, stronger traders to adjust inventories in and around that level. Here's the 1 minute chart. Just finishing, leaving the opening range at the high of the session. The opening range is only 12 ticks wide, so you're looking at about 15 ticks of risk if you're taking the short to the downside below the opening range. If you take a look at the ranges that we've seen lately, this is a 81.70, 83. So we're looking at a 180 tick range on Friday. If we have that same kind of range and we're short at the high of the day, we've got some pretty good opportunity. Remember, there's some longs here. This weekly kickoff level may be important. We've opened right at it, taking a look again at that 1 minute trade. The thing about the opening range trade is it establishes risk relatively quickly. Now, you got to be careful because we know that if there's other people that have taken this trade, their stop is going to be 1 tick above the high of the opening range. Sometimes you'll see a market come back and just take out those stops and then turn around and head the other direction. We had an opportunity here to even limit risk even greater by coming back halfway into the opening range, and we see that the market now continuing to push lower. This is an interesting opportunity. Even if it's a loss, it's an established, it's a known, and it's a small risk. So you could have, you could lose on 15 tick opening range losses, and you can make all that back in one good opening range trade. So far, it looks like the market is leaving 84.80, 84.83, the high of the session so far, leaving it behind. Might be an interesting opportunity. Opening range trades, they're streaky. They are streaky, but they do occasionally pay very nicely. So let's go back to the Nasdaq now. The difference in the Nasdaq and the S&Ps is we're already in kind of a downward slope here. We've got lower lows. We've got lower highs. The market is presenting as weaker. Last night, where did we trade down to? We just kissed to the tick the weekly kickoff low of 15,270. We got to see that in overnight trade. I'm looking forward to seeing an opportunity in regular trading hours to see how the longer time frame traders act in and around this area. Again, we don't have any new open interest information. We've got settlement is the Friday settlement, but it's kind of similar to the S&Ps in the fact that recently, every time we've come down to this level, we've rejected swiftly. If we're going to be back down here again, are we going to exhaust the buyers that are apparently down at this level? If so, how quickly will they turn tail and sell? Excuse me. My apologies. So here we are. We have gap rules from our non-settlement day yesterday. Very low volume. Did anybody really care? We're probably not going to, or are we going to have a gap below Friday? It's a little bit of question. Boy, that's just double kiss down there. Kind of a weak low there. So in the overnight, we may go revisit that. This is going to be waiting to see how this market opens. This weekly kickoff level is going to be somewhat pivotal. We've got a naked point of control that we just checked in the overnight, still yet to be checked in the regular trading hour session. We've got overnight shorts with a gap, and you're going to treat it with gap double bottom here, right here. So it came down and traded that weekly kickoff level in 2 30-minute periods, leaving no degree of excess is really what that bottom looks like. Now, some people would call that a double bottom and would be looking for opportunities to buy against it. May mean that the market got too short down there. In a longer time frame, it's an unfinished downside auction and is likely to be revisited at some point. Gap rules. If you open outside of the previous day's range, like we are today, that creates a gap in pricing. Now, overnight, yeah, there's overnight, but there's very little volume overnight. When we open with a gap and we cannot close the gap relatively early in the session, that marks acceptance of lower pricing, and we look to sell strength for continuation in the direction of the gap, which would have us looking lower. And James, yes, no settlement because yesterday was a half-day holiday. Yes, when there's abbreviated trading, they do not settle price on that day. We still look at the previous day's settlement. That's all we have to look at. That's our last kind of marked to the market level. You bet, Island Sim. Ryan, yeah. Average auction is the range from the ceasing of one upside auction to the ceasing of the next downside auction. It's a range number. Something probably similar to the ATR, but more related to the profiles. So here we are opening with a gap. We've tested the weekly kickoff low. Kind of, it's going to be a challenging day, as they always are. But I'm reminding myself again that if I miss something, it's okay. I'm going to be patient and wait for the right opportunity. I'm going to go back and check the crude oil here. So what have we got off the opening range trade so far? So if we're short at 70, we've had about almost a 40 tick move to the downside when risking 15. That's almost 3-to-1 reward over risk, and we are 8 minutes into the trade. Shaw, that's a great question. Shaw is asking, when gap rules, would you look at Friday's range instead of yesterday's range because there was such little volume, limited trading day, all of that? It certainly is something to consider. And some days, sometimes it's going to be right to look at that as the gap. Other times we may come up, not close the gap, and then continue to move lower. It's one thing that we got to consider twice on days like this, where we have a gap from the limited trading hour session and a potential gap from the previous full day's range. Something I was considering, something I was looking at, and there really is no right answer. There's going to be periods of time when the gap from the previous full session is going to be important, and there's going to be times when the gap from the session the previous day is going to be important. It's a really, really good question, and it can't be answered perfectly, much like just about everything in futures trading. let's look at gold. So we're still kind of range bound. This market really still trying to look for new information. It's kind of monitoring for new information. It's kind of hanging around here. With the inflation and all of that going on, a lot of gold traders, a lot of investors probably wondering what the heck is going on with gold. Normally, it's the store of value. We do have the dollar still kind of creeping higher, so it makes sense that the dollar holding, it has gold kind of holding. It's still in a short time frame controlled market. It's looking like we're starting to create the beginning of a bull flag. And this morning after the open, this bottom part of this bull flag was pretty swiftly rejected and created a wonderful upside opportunity right on the open here. Well, it's 7:30 pretty much. Here's what it looks like. Settlement is, of course, still the same spot there, 1816.50. Here's what I'm kind of looking at as the bull flag. We've got only 2 points of contact, maybe 3 points of contact now. And when we came down here, the market opened, it looked below this trend line. But boy, it sure rejected quickly once we took out I think the high of the opening range. Boy, it really just barreled to the upside. It was a really wonderful, fast, about a 120 tick trade. And just off of this trend line, just off of believing that this may end up being a bull flag. If we break out to the upside, that's going to create another long opportunity for us. Then we could take us to weekly kickoff high, last week's high, and even points higher if we do trade above and accept time, volume, momentum, and participation. That four-legged table of acceptance, we accept above this, may create an opportunity, another upside opportunity for us. It's the way the bull flag works. As far as the gap rules, we opened with a gap. We closed the gap. And we closed the gap really quickly and really early in the session. So now here we are back in value from yesterday, back in value from the previous day. When we look at the Friday low, we opened with a gap below that as well. Both of these gaps were very quickly closed. All right. Let's take a look at the euro now. Hey, the dollar a little bit stronger this morning. What was it up? Just up a little bit. Nothing like about 0.25%. But the euro continues to pull back off of the breakout. We're back to the area where this breakout began to occur. Weekly kickoff low here, 1371, 1375.5 is our current low. This might be actually a very nice support level where it was resistant to a degree in the past. Moving back towards it from the other direction could bring us to another leg to the upside, of course. So much of this depends on the dollar and inflation. So this weekly kickoff low I'm viewing as somewhat pivotal. We're going to have a gap. We do have a gap. Let's take a look at the 30-minute chart. So here's yesterday's trade. It's actually lower than Friday's. So I think our real answer here would be the gap close would be to yesterday's session. Volume wasn't actually horrible yesterday in the euro, and it actually finished with a full session, but still it's not a non-trend day, a non-settlement day, so we have settlement back right up here at 114.28. We do have a gap. We have some considerable overnight shorts in this market. If these overnight shorts don't see continuation, if they don't see help from longer time frame traders, at some point they may start to get a little bit nervous. And that's when we may get our opportunity to see if we can close this gap. If we cannot close the gap, and that's relatively early, we continue to look for shorts down to weekly kickoff low. If we close the gap, that may bring us to higher levels. But overall, we've got a short time frame break here. We've got some short time frame lower highs, lower lows during this pullback. This could actually end up, looking at the daily chart, being a bull flag, similar to what we're seeing is potentially a bull flag in gold. If we take out the weekly kickoff low, I'm thinking the bull flag opportunity will be gone. All right, so now to the 10-year. We had a breakout. We had a pullback to a breakout area last week. We've got last week's range here. Yesterday, we took out the low of yesterday's range. We're continuing to put in lower highs and lower lows. We're back into a one-time framing activity. In other words, on the daily chart, each successive daily high and daily low is lower than the previous one. We've got tons of space down below. I've got 126 even as a potential move for this market, and I believe there's plenty of space to do that. As rates continue to rise, the price of the 10 years, the price of the treasuries continues to fall. I think there's a pretty high probability it's just not going to be in a straight line. I wish it would be, but it's not going to be. 30-minute chart. Yesterday's session. Do we have any? That's not today. That's not this market. Here we go. Here's yesterday's session, a gap that went unfilled. We've got the overnight started here. It is now here. We are continuing to hold some overnight shorts in this market, even though it looks like, a lot of it has been probably reconciled, but I'm still looking at it as some overnight shorts. It's a decent opportunity for us to take a look. And perhaps the high of yesterday's range, a pretty decent opportunity to the short side, but still kind of a weak level there. Do we have a gap here? We do not have a gap to this session. We still have the gap from Monday session to Friday session. Only going to be important if we start to go back into it. Still looking at this market like a market that I want to sell strength, and this would have been a relatively decent opportunity for us to sell that strength. I probably would have been looking more for a test closer to the overnight high for that opportunity. Unfortunately, we did not get that. Take a look at the, here we go, same spot here. Take a look at the nat gas. Boy, what a kind of a screwy market here. It's winter. A lot of folks, we're looking for higher pricing. Europe is certainly paying higher pricing, and as we all are for energy overall. But we've got the inside extended trading hour range today in that gas. Look at the volume yesterday. Look at the range. We're still inside it. To me, this market is certainly acting like it's awaiting some sort of new news, something to happen over in Russia or Ukraine. Take a look at the 30-minute chart. It's eerily quiet. I'm going to put that out there. Eerily quiet. Okay, this is Friday's settlement. I don't think I put the profile on here from yesterday. We're still largely inside extended trading hours from Sunday night into yesterday. We're still in range. We're still in value. We don't really have any overnight inventory. I'm going to just sit here and be patient and watch and see what happens with this market. The only extremes that we really have are overnight last night and overnight on Sunday night are the only extremes in short time frame that I have to look at. No gaps, no runs, no hits, no errors, nobody left, no runs, nothing. Just patience. Patience. All right. All right. So we know we've got our work cut out for us this morning. Deanna tagged in a potentially helpful post in your new group on Facebook. Thank you very much, Deanna. You've really kind of opened my eyes to, the importance of of course, protecting our pets, but also protecting the coyotes. It's a great Facebook page, and I appreciate all your help with that. Nico, would you say that your market forecast would also apply in the micros, or does it only apply to the minis? No, the micros, I mean, they're parallel. There's an arbitrage that keeps them very, very closely in line. I would, because the minis are kind of the higher volume, the higher, more traded. But that's where I'm getting the information as far as volume and open interest and all those things. But I think it's more than reasonable to expect almost exact outcomes in both. Okay. Rick, gold down $4, silver up 40 cents. My goodness. Well, you got the good thing going there. How much do you typically risk around weekly kickoffs? Nicholas, the weekly kickoff levels are levels that I come up with, and that I do offer a little bit more risk when it comes to opportunities close to them. Let's say in the E-mini S&Ps, 5 points. Typically, it depends again on context. It depends on volatility. It depends on all of that. Crude oil and gold, typically around 20 ticks. Okay? Yeah, chart minis, trade micros. Awesome, Deanna. Thank you very much. Milan, thank you. Have a great day, everyone. Jeff. All right, let's take our deep breath. We got about 7 minutes before the equities open. Humble, grateful, and creative. Stay patient and trade well today, everyone. So I'm going to run down to the proverbial trading pit here in a couple of minutes. I hope to see you there. Hope you have a good trading day. We will be presenting the Coach's Playbook today at 11:30. We'll wait and see what the topic is for that. We should see Dan for the market recap today at 3 o'clock. And, of course, I will be in the Top Step Trading Foundation at 12:30. Hope to see you there. Hope that you find something good to use moving forward in your trading. Let's get out there and profit. Have a great trading day. Blessings to you all. We'll see you later.